Hey, what's up? Today, I wanted to share my portfolio update for the end of September. So in this video, I will break down my current positions, kind of my thinking behind it, why I'm invested into these assets, as well as my market outlook and my plan for the next 6 to 12 months heading into the altcoin season. And hopefully this video would help you avoid some of the mistakes I've made as well in the last few months. And if you're new here, my name is Richard. I'm a yield farmer and DeFi investor. And like always, this is not financial advice. So please keep that in mind. So if we look at the portfolio trend here on the US dollar terms, it's not too bad. In August, my portfolio did peak out at 265K. Right now it's sitting around 200K more or less. I updated this yesterday, so the price did move sometimes pretty aggressively. In Bitcoin terms, my portfolio has dropped by quite a ton, as well as the ETH and Solana terms. But the reason why is not because of a bad investment or a bad strategy. I did get scammed out of quite a lot of my holdings last month. About 76K here, I did add it as an off-ramp. I've already made a video on my channel about that. So if you search for scam, you would see that. But basically, the quick recap is the guy posed as a potential client and was kind of like a social engineering scam, kind of got me to trust him and then got me to clicking some buttons, trying to, get me to show him what to do to like set up Rabby wallet and stuff like that. He was paying me for some coaching, but throughout the process, he was distracting me and getting me to multitask and stuff like that. So I did make some mistakes when setting up wallet security. Some of the accounts I set up was not secure. And that's how he got to me when he basically tricked me into demoing the wallet. So my advice is to double up on your crypto security and treat your hot wallet as a compromised wallet. So even if you created the wallet, you never know if the seed phrase is secure or not until your funds are gone, right? So just treat every single hot wallet as compromised. And you should be linking your Rabby wallet to your ledger to be interacting with DeFi. And you shouldn't put all of your holdings in that hardware wallet anyway. So that's typically the best practice. And when you guys link your hardware wallet to your Rabby, it should not ask for your seed phrase. You should be able to connect directly and just be careful what you sign. But if you interact with like the proper sites and the large protocols, you should be fine. So largely a human mistake, and the scammer was pretty good at manipulating me. So I kind of fell for it. Not much to add there, but let's take a look at the portfolio breakdown. I did lose a bunch of my core Ethereum holdings. The core ETH holdings, you can see in August, I did have a bigger allocation to stablecoins and Ethereum, roughly 15 Ethereum and $16,000 in stablecoins, right? But because of the scam, I did lose a big portion of that part, and I'm left with 4 something Ethereum and only about 2,000 something USDC. But that's not a big deal because I'm still building my blue chip allocation, dollar cost averaging into Bitcoin. That's one part of my overall strategy here. I'm just using some of the fees that I earn from yield farming to de-risk into stuff like stablecoins and Bitcoin. But you can see the overall portfolio breakdown is quite high risk right now. I'm holding a bunch of NFTs. The value sometimes fluctuate a lot, but I'm keeping it constant for now so that you guys could see the actual performance of the yield farming portfolio, right? But basically NFTs, some ETH, some Bitcoin, some Pendle, and some Pixel is what I mainly hold right now. And I'm really bullish on Pendle. It's about 5 to 6% of my portfolio right now, as well as Pixel. And Pixel is a higher risk token. It is a more of a brand and gaming token. I'll go a little bit more into detail about that. But the Pixel and the NFTs are basically exposed to this ecosystem. So I'm heavily exposed there. And that's kind of my main play for this cycle. And we'll see if that investment or bet plays out or not. But this is my current portfolio. You can see Pixel and ETH makes up about like half of my yield farming portfolio. Again, in August, I did have a more balanced approach where a lot of it is in ETH to USDC, but I'm not going to rebalance my portfolio right now because the exchange rate for Pixel is not too great. I'm still waiting for some catalyst that would most likely push the price upwards to allocate more into blue chip pools. But you can see I do have some higher risk pools as well, like MOG to ETH. That's basically my meme coin allocation. Not a huge amount, about like 7% of my total yield farming portfolio. Pump to USDC and pump to hype has been doing quite well recently. And I am bullish on these two assets. That's why I am yield farming them in the first place. When you guys are yield farming, make sure that you're actually bullish on the underlying assets and not just be blinded by the APR, right? We want to think about the worst case scenario that could happen in each pool. So for example, I'm yield farming pump to USDC. What's the worst case scenario in that case? If pump goes down by like 90% and I'm stuck with a bunch of pump and unrealized losses, then that's not a good scenario to be in, right? But for a crypto to crypto pool, it could be a bit different. For example, you could be stuck with either pump or hype, or if both of them do not perform well in the next 6 to 12 months, my portfolio would go down as well, right? And it's the same thing for these other pairs. So make sure when you guys are yield farming, you're actually trying to accumulate these two assets that you pair together, and you don't want to be just blinded by the APR, right? Some of the newer pairs or like meme coins and stuff like that could be very high risk and the APR could be really high. But if the underlying asset do not perform well, it doesn't matter which strategy that you use. I've tested a ton of different strategies, even stuff like the bidding LPs. I've recently seen a video of someone saying that, okay, this is like 100% guaranteed win rate, but there's no such thing as that in DeFi. So keep that in mind. You're taking risk most of the time. That's why you're getting the higher reward. But for most investors, you probably don't want to go too heavily in altcoins like I currently am. Again, I do have other investments and I am younger, so I can recover my portfolio fairly quickly. You can see my portfolio is still sitting at 200K and I'm still comfortable holding onto these assets. But the APR estimate for these pools, I'm still able to generate a nice $2,000 a month of income. Of course, it's not going to be as much as my old previous portfolio before the scam, right? But hopefully some assets like Pixel would pick up. And let's dive into like the specific P&L for each pool, right? You can see my portfolio, if you use Reverse Finance to measure, right now, a lot of the open positions is sitting in an Ethereum loss, so roughly 3.44 ETH loss. If you add all the closed positions, right? This is the reality of yield farming altcoin pairs. You will be sitting in unrealized losses if these altcoins do not outperform Ethereum. And of course, we want to try to bet on outperformance, but we never know until the price action actually happens, right? We want to pick solid assets. We want to bet on outperformance. For example, I do believe that Pendle would outperform Ethereum in the next 6 to 12 months. I did get in at a pretty good entry and I'm comfortable with it, earning roughly 20% APR on these two assets. And even in the worst case scenario, I'm left with a lot of Pendle, right? So I'm planning to buy Pendle anyway. I want to have it in my portfolio. So that's the way that you guys want to think about these altcoins. You definitely don't want to be yield farming 90 or 100% altcoins like what I'm doing if you don't want to hold onto these assets. And this is my other wallet. It's showing an ETH loss here, but sometimes I am trying to accumulate more stable coins rather than Ethereum. For example, this is the position where I got scammed out of. It shows a negative Ethereum loss, but a US dollar profit. But in this scenario, I'm trying to dollar cost average out of Ethereum, right? So it is completely normal to have like an Ethereum loss if you're selling Ethereum on the way up, right? And you can see that sometimes I set my ranges pretty wide. If you look at it here, it's 2,300 on the bottom range and 100K on the upper range. The reason why is when you guys set ranges, the wider your range, the more capital gains you're going to have, but the less fees you're going to have. So if I'm trying to optimize around capital gains, I will not be setting a tight range, right? And you can use different trackers like Metrics Finance as well to look at like the APR. You can see even with a wide range, I was generating close to 10% APR. So if you guys have a larger portfolio, you're trying to live on crypto, you probably want like 80 to 90% of your portfolio in blue chip pairs like ETH to USDC, right? It's still going to generate a pretty decent APR. Like in this case, it's almost 10% APR. So if you have like $1 million portfolio generating 10% APR, it's still like 100K per year that you could use to pay for your expenses, right? I think it's a mistake to try to squeeze out the APR and take too much risk and trying to live off of a smaller portfolio. So I'm still in portfolio building mode. Again, I don't need the income right now from my portfolio to fund my expenses. Of course, it would be nice to have more income, but I'm not trying to force the APR. Again, I keep emphasizing this concept in all of my videos because it's very important. When you guys are generating more yield, you're typically taking on more risk, but sometimes there are very good opportunities to take smart risks. For example, for this pump to USDC position, I'm riding up the uptrend, earning some capital gains and really nice fees in the process. 60 something percent APR is nothing to scoff at, especially because pump is a revenue generating protocol. It's like the top 5 or the top 10 all the time. And my overall strategy for a lot of these pairs is to basically try to get in at a good entry, set a wide range. And when it's trading above my entry, I'm going to have a positive capital gains in the liquidity pool alone without even relying on the fees, right? So I want to not rely on the fees for my profit and loss. And if the prices do crack back down below my entry, assuming I am bullish on the asset, in this case I am, based on my research, I would then compound more of my fees into the pool when it's below my entry. So in this case, I would be essentially buying more pump at a cheaper price if I compound below my entry. And this would essentially drag down my entry over time, right? And the lower my entry, the easier it is for me to turn a profit as long as this token doesn't bleed out. But basically, my current position, the major bet is still on Pixel for this cycle. Pixel is a lower cap gaming token. The fully diluted value is only around like 15 million market cap. That's why I'm not shilling it too heavily on my channel. You should be doing your own research anyway. And everything that I basically share with you guys on my channel is my own investment strategy. Hopefully it helps you out, but I'm not telling you which token to buy, right? I like this asset. I like Pendle. I like Pump. I like Hype. I like Ethereum a lot, but I also like Pixel a lot. But in general, gaming token have not been doing that hot, right? If we look at stuff like Prime, you can see it's nearly at like $1 and the all-time high is like 20 something dollars for the Echelon Prime token. And you can look at stuff like Superverse as well. If we pull up Super, it is being shilled by a very popular YouTuber like Elio Trades. And you can see the all-time high is like 2 point something dollars. And right now it's still trading at 0.635. So a lot of altcoins have not made its recovery yet. We haven't seen like the level of euphoria that we see in 2024. So I'm kind of holding out for that. But the reason why I'm still heavily betting on Pixel and accumulating Pixel is because it ties into the Monad blockchain that is coming in Q4 as well. If you don't know what Monad is, it's basically a high performance blockchain that is aiming to be more decentralized as well. I'm not sure how the token for Monad is going to go, but Omnia is launching on Monad and they've been working closely with Monad. And I believe Wab, who is the founder of this project, is an early investor in Monad as well. So maybe there's some airdrop speculation that would be tied into Pixel or the NFT, which is the Sappy Seals NFT. But basically, this is still a high risk, high reward investment, in my opinion. They're launching a pet battler game in the next few months, and hopefully this would drive up the demand for Pixel as well. But again, I'm not telling you guys to buy this token. Don't buy it. It's very high risk, but I'm just sharing what I'm betting on. Again, if these two assets basically go to zero or drops down by 50%, it's very likely that my portfolio is going to drop by a lot as well. And I'll share a little bit about my strategy on how I plan to combat that risk. The first is I'm going to be taking some more profits pretty aggressively. For example, if Pixel is going to be testing the local high in the next coming months, I will be selling some of my holdings to de-risk, but I'm not going to sell all of my holdings because I do believe that Pixel would reach at least like 500 million fully diluted value, especially if the market is really risk on. And I am dollar cost averaging into Bitcoin and adding stable coins with my fees that I earn from my pools. So that's another way that you guys could consider de-risking your portfolio if you are holding onto a lot of altcoins. So now let's talk about the market outlook and how I believe the market cycle would play out. So right now, if we look at Bitcoin dominance, it's still below 60%. I would like to see that hold in that level and basically start cracking down like what we saw in the last cycle. If Ethereum is able to hold above 4K and push higher to price discovery, this is going to put a lot of price pressure on Bitcoin dominance. And when Bitcoin dominance is falling, a lot of investors are going to be buying altcoins to catch up. And a lot of people are still very cautious. They're not fully deployed into altcoins yet. And I do believe that there is still more upside to be had in this cycle. If we pull up the others chart, which is mainly the altcoins, excluding the top 10, right? You can see it's trading at 320 billion. And if you guys have a pretty altcoin heavy portfolio, your performance would probably not be that good this year, right? Compared to like 2024 or like 2023 heading up into 2024, simply because the price movement has basically been down and sideways. If we look at the peak in 2024, December, the others market cap was at like 440 something billion dollars, right? Right now it's still trading at 319 billion, which is still lower than what we were seeing in January. So that's the reality. If the market is not good, it's going to be harder to find like the outperformers. But every day there is still opportunity in the market. You just got to be more picky. And as long as you're not doing something crazy, like for example, putting all of your net worth into altcoins, then you should be doing okay, right? And for most investors, I think it's better to stick with like 80 to 90% blue chip assets like Bitcoin and Ethereum, some stable coins, and then invest the rest into altcoins to make it easier to hold, right? This is especially true if you guys have a larger portfolio size. We don't want to be putting like that much into altcoins like what I'm doing. But again, I do have more cash on hand to deploy if the market goes cheaper. I don't want to be buying a ton of Ethereum right now because I do have exposure to Ethereum already. So I am being more patient with my investments. And if altcoins do drop back to like the very low level, I would be deploying some more cash to buy some altcoins as well. So I'm looking at like these dominance chart and basically see like, okay, where is the undervalued asset? Which asset can I buy so that there's more potential upside left? And if we look at the others dominance chart as well, it's trading at like 7 something percent, close to its previous cycle low at like 6 something percent, right? So the risk and reward of holding onto altcoin is still pretty good. And again, I am still de-risking throughout this whole process so that I'm not caught in the market with no stable coins to deploy. But if you guys are looking into deploying into the market with some stable coins, I would be looking at some altcoin pairs that have a decent chance of trending up in price. For example, AVAX is on an uptrend right now. So you could be yield farming pairs like AVAX to USDC to capture that uptrend, right? And again, I'm doing that with stuff like pump to USDC. If I get a good entry, I'm riding that upwards. I'm selling my fees in the process. You can see this position has already generated me 400 something dollars this month, right? And for these higher risk investments, if this go up by like 2 to 3x, I would be sure to actually take all of my profits and maybe exit the positions completely as well. So for altcoins, I think it's helpful to take profits more aggressively when the profit is there to take, rather than to hold for like the ultimate top and then potentially risking a big drawdown. So that's pretty much it for my market outlook and my plan. I still plan to keep investing into altcoins. I'm compounding some of my fees. For example, because Pixel is trading pretty cheap relative to Ethereum, I prefer to compound down into these pools. And then when the prices drift upward for Pixel, then I would be selling those fees more aggressively either into Ethereum or stablecoins. So that's pretty much my overall strategy. And before I hop off here, someone did ask me like, okay, can you explain like the ETH accumulation strategy for the altcoin to ETH pairs? So a very simple example is this Pendle to ETH chart. You can see Pendle has been able to kind of outperform ETH sometimes, and then it also underperformed ETH sometimes, right? What we want to avoid is when Pendle is really hot, it's outperforming ETH by a lot, then you're swapping a ton of ETH into Pendle. You're essentially buying Pendle when it's overvalued, right? What I prefer to do instead is when Pendle is undervalued compared to Ethereum, I would be swapping some of my Ethereum into Pendle to yield farm this pair. So the reason why I do that is because if I buy Pendle at this price, If it drifts down, I'm still buying Pendle at a cheap price that is lower than my entry, right? But if it drifts up, I'm basically selling the Pendle inside my pool for an ETH profit on the way up. So as long as it's trading above your entry, you're selling Pendle at a higher price than your entry. So that's why the entry is also very important. If you enter at a high price, you're basically getting a worse risk to reward when you're yield farming these altcoin pairs. And the reality is, even if you did not get the perfect bottom, for example, you entered here and Pendle dropped further, your losses are going to be way less than if you entered up here and then you ride the trend all the way back down, right? So this is a really good chart to look out for stuff that is keeping up with Ethereum at least, or fluctuating between like outperformance and underperformance. And ideally, it's also supported by a good narrative, good team, good fundamentals like the total value lock, the revenue it generates, good tokenomics, all of that stuff. So I'm very comfortable with Pendle. That's why I'm still yield farming this pair. And again, the worst case scenario is if it drops out of range, that's fine. I'm still holding Pendle. I'm very bullish on Pendle, so I don't mind just holding onto Pendle. And there are other pairs that I could yield farm as well, like Pendle to USDT. So that's not a big deal. If it drops, it drops. That's a way with altcoins. You got to consider that, some of these altcoins are going to drop and never recover as well. I don't think that's going to happen with Pendle, but we've seen a ton of altcoins that would drop and then never recover in the process, right? So this is a very powerful strategy. And I wish I had discovered this sooner. I would have made much more gains in 2024. And that's where most of my gains came from in 2024, is to basically get a better entry if I can, and then ride the uptrend upwards. I would be gaining ETH in the process while earning some really, really nice yield. But again, this would rely on altcoins outperforming Ethereum, right? And another chart that I really like to look at is ETH to others chart. So if I pull up ETH to others, if this goes down, it means that others is outperforming Ethereum. So right now, Ethereum is still kind of like outperforming others here. It bounced against others a little bit. But if we see a strong crackdown of others against Ethereum, that's probably a good time to lock in some profits into Ethereum or into stablecoins when the market is really risk on and a lot of these mid to low caps are basically pumping and outperforming major caps like ETH or Bitcoin, right? So I hope that was helpful, guys. And if you want to check out more videos on DeFi or yield farming, then feel free to check out my channel. I post a ton of content on DeFi and try to give you guys the best information possible. Sometimes there's a lot of misinformation in DeFi, and I'm giving you my best information so that you don't have to make the same mistakes I did. Thank you once again for watching. I'll catch you next time.